NDTV Profit. I am Mahima Vaccharajani and you are watching Your Money Matters. Now, a home, for many, it's the biggest investment of their lives. But what happens when that dream is brought down quite literally by a demolition drive? As bulldozers roll in, the walls and collapse, buyers are left asking as to, was my home ever legal? Did I miss the red flags, and can this happen to me too? Today, we look beyond the rubble at the system and approvals and the growing fears amongst buyers. And to discuss this in detail, we are joined by Arvind Rao, founder of Arvind Rao and Associates, and Chintan Vasani, partner at WiseBiz Developers, joining us now. Chintan and Arvind, both of you, very warm welcome to the show. Chintan, I'll start, with you first, because you're the right person to ask as to, what is the kind of documents or a checklist that one must always have with themselves before buying somebody else's property, or even if it's a new property, what should one exactly look at?
Right. So first of all, thank you for having me to this amazing show. I do watch all the episodes and I'm very glad to be part of today's episode. Documents, yes, you require a lot of documents, but let me quickly give a few which are must. One is the chain document, like the developer must have sold his flat to the first owner. The first owner might have sold it to owner number 2. While that owner number 2 might have passed out, like, he might have died, and legally that property would have been would have inherited that particular property, and that person is selling it to you. So whenever you're buying a property, the must is the legal chain documents of all the documents that have taken place during the entire schedule. The second is the encumbrance certificate, the EC, that actually tells what are the liabilities on that particular property. It is a must document whenever you want to buy a property. Third is a society NOC, which says the society says, okay, fine, you can just sell this property. That is must if you want to buy that property. Or if the property is mortgaged to a bank would give a NOC, which is of course one of the most important documents. Let me also share a hack for doing this entire thing, what I would do.
Yeah.
One is a real estate channel partner is super important whenever you're buying anything. But with that, the main importance are two different people. One is a lawyer, one is a chartered accountant.
Right.
A lawyer would want to go much into details and he will make sure all the documents are well in place. The second hack that I want to share with your guest is always, whenever you're buying a residential property,
right,
go for a housing loan.
Okay.
Because whatever I said, much more than that, scrutiny is done by the banks.
Right.
So if a bank is confident in giving loan,
right,
everything is done. So it's an added thing that you can have. And of course, it makes sense when you are sure what you're buying.
Right. Chintan, I think you've set the ground very well for my next question to Arvind, because Arvind, my next question to you was that, okay, if one is considering to buy a house, the first consideration there should be as to whether the person is actually ready to buy the house or not. So the first consideration is that, and a follow-up to that question would be, if the person is ready to buy a house, how should he or she finance buying a house?
Interesting. And it is so very important, your first question here, as to when is the right time, or how do you assess whether you're ready? Because I think regardless of the country, I wouldn't want to be specific when I say India here, because buying a home is always a very emotional decision. And while one may keep in mind that I am looking to buy my own home in the next 4 years, 5 years, it has happened so many times that you are passing by a particular project, or you walk down somewhere and you see and you feel this is the home that I want to buy. Generally, home buying decisions tend to be a lot more impulsive than the thought when it comes in somebody's mind. Having said that, typically the readiness I would put it in 4 or 5 main bullet points. One is that the individual should have a track record of a stable income for at least 2 to 3 years, which sets the tone for how much is the affordability in terms of the EMI for the property. Second, there should be a decent emergency fund that the individual should have available, because emergencies can come at any time, even if you have bought a home. Third, since 90% of the time individuals rely on a home loan to finance their home, credit score and a good credit score is really important. So the individual should ensure that the credit score is 750 and above if they're looking to get for a home loan. Fourth, which our other guest here today has laid out in detail, which is have clear requirements in terms of the property and the paperwork ready. And fifth, and the most important thing, be ready or be very comfortable that if you are going in for a loan, it is going to be a 15 to 20-year commitment. So, are you okay to see a set amount of money leaving your bank account without asking you every month for the next at least 15 years? If you're okay with this, all these five, then that's when you're ready to buy the home. In terms of financing, so you have those aggressive home buyers versus those conservative home buyers. But regardless of these two, I would put it that at least 20% of the total home cost should be financed by way of own money. So, unless and until an individual is prepared with own funds, which takes up at least 20% of the total home cost, they should not venture into buying. And I would like to emphasize that when we are talking about total home cost, we are not only talking about the agreement value of the property. What will also get added to this is your various charges that go along with the buying of a property, especially if you're buying it off the developer.
Right.
Then there is stamp duty, registration, all those long lists. So you take the total and ensure that you have at least 20%, and the rest 80% can be financed by way of a home loan.
Okay, and since we're speaking about that financing aspect, and we've seen that RBI has recently cut rate by 50 basis points. That's your repo rate. The expectation is that most of these housing loans will also see a good impact in terms of being a consumer of that loan. We'll see a good impact of that. What would you suggest right now to those buyers, considering they are a fresh home loan buyer? Would you suggest that they should reduce their tenure, or would you suggest the entire EMI amount goes up? What would you suggest?
So actually, I'm a little biased when it comes to this because I typically tend to advise people to keep their EMI constant and look at reducing the tenure. But having said this, in specific cases where cash flow is a problem, then one may look at reducing the EMI as well. So if cash is not an issue, definitely one should go to reduce the tenure.
Got that point, Arvind. Chintan, the next question for you, in my understanding is that now we talked about buying a new house. Now, what if somebody is buying a second-hand property? Is that very different from buying a new property? What are the things that one needs to consider before buying that? And what are the key aspects that one needs to keep in mind? Do you think that a chartered accountant and a lawyer will still be required there as well?
I think any purchase that you make in real estate, that's a dream team to have, a good channel partner, a good CA and a good lawyer.
Right.
When you're buying any property which is a resale property, you need to understand what is that particular micro market.
Correct.
Whether that market has grown in last few years, few months, any new infra developments would have happened in that particular area. You need to understand what is the circle rate and what is the market value of that particular property.
Correct.
That thing, because you can compare the transaction that would have happened in that particular area. And when you have those kind of details, there are a lot of portals right now which give you an idea about what is the ongoing rate in that particular area.
Correct.
Second, you can also understand what are the redevelopment chances that might happen in that particular property that you are buying.
Right.
Because if at all you're buying a property in next few months, you will have to give it to a developer to redevelop it.
Yeah.
You have to be ready in your mind, or your family would will be super frustrated, because moving houses is the biggest headache according to a lot of Mumbaikars, because redevelopment is a very Mumbai thing.
Yeah.
Understanding that is super important. Secondly, you also have to understand how well the property is maintained.
Correct.
There's no because if you do like one color and everything, you might have missed the leakage issues, or some small issues that
Some pest control
the
issues.
pest control issue that you might have missed. So you also have to understand whether the property is worth buying for you. And of course, it has to be a very thoughtful decision. I always tell people it's not only you who is deciding, but the entire family who's planning to stay there. There are a lot of, you need to be around a supermarket, you need to be around a school. The infra should be very easy for you to travel. So all these are very crucial points whenever you're buying a redevelopment project, whenever you are buying a property which is due for redevelopment. And also a lot of times, there are offers given by multiple developers. So on day one, you are very sure, just in case you are investing into a property, how much more you can expect by if the property goes into redevelopment.
Interesting. And speaking of redevelopment, we were speaking earlier as well, and you told me some interesting stories about how redevelopment is completely going crazy in Mumbai markets. So, it's not the case in other tier 1 cities, but it's only the case in Mumbai, and that is probably the reason as to why these rents are going significantly higher. Tell us something as to how this entire redevelopment market is playing out and what one needs to consider, because there's no cap to how these rents are also rising because of that.
So very recently, I was on one of the other NDTV shows where I spoke about rentals, which have gone up by more than 40%. There are few micro markets in Mumbai where there are no flats available.
Right.
All this is because of redevelopment, because the building which are getting redeveloped, all those people are also looking for apartments. So what has happened, something in last 4 years, 5 years is, always when you invest into a commercial property, the rental yields were much higher. Right now in Mumbai, the rental yields of redevelopment, rental yields of a residential property are almost as much as a commercial, which has happened for the very first time.
Correct.
So of course, because of this, and this is going to be going on because we have a huge population, and the only way is going vertical. And according to the recent data, there are more than 3,000 buildings which are already under redevelopment, and according to my knowledge, more than 6,000 to 7,000 buildings are those which can get redeveloped very soon. So just imagine 10,000 buildings, and those people will be in the market to look for houses on rent. So this is going to be like a very interesting next 10-year cycle for every Mumbaikar. And of course, it's a very Mumbai thing because, I travel to multiple tier 1, tier 2 cities. Mumbai and a few patches in Pune are the ones where redevelopment is picking up. But Mumbai, it is crazy, and I think Mumbai redevelopment is the only way ahead which can make us a world-class city.
Right. So the builders who are taking this redevelopment up are going to pay the asked rent, and unfortunately, people like us who are actually paying rent are going to suffer because of that. So that's the unfortunate part. But Arvind, coming back to you, because we are discussing the point of rent, just wanted to understand that generally a lot of people don't know when they're new to a new city and they're going through this rental agreement, what kind of charges is one supposed to pay while entering into a rent agreement, and what are the aspects that one need to assess while going through a rent agreement?
Okay. So in terms of charges, I think there are broadly 2 or 3 heads under which charges would apply. So one is obviously the stamp duty, which is payable to the government. And the quantum of stamp duty is directly related to the period of the lease agreement, A, and also the rental amount as well as the increments in the rent that have been covered in the lease. So this determines the stamp duty. Second is the registration fee, which is more like a flat fee payable again to the government, and incidental charges like scanning and etc., which the registration office recovers. Third head, I would put it as if you are engaging a professional to get this lease agreement done for you, would be their professional charges for handling this, the whole registration bit, because that makes it a lot more comfortable for people to get it done. Nowadays, most, especially for if both the tenant and the landlord have Aadhaar, and it is also possible to get this process done online, which has kind of reduced the time that one spends at the registration office. But costs, I think, would have come down a bit, especially for the registration professional. Coming to the second question you ask about what are the elements one has to look for in the lease deed. Um, I think step one, who is responsible to pay the maintenance and the property tax, and even the water bill of the society. That is important because generally it is the liability of the landlord. But if not looked properly, you never know, you may land up with that liability. Second is, which generally is a part of the negotiation that happens at the point of doing the lease, which is what is the lock in. So, what is the minimum amount of period that the tenant has to stay in that property, or even if the tenant wants to vacate, what is the minimum period of rent that has to be paid to the landlord? These are the two main elements, and one has to always look out for certain hidden clauses, like if there are any past demands that come up in relation to property taxes, whose liability is that? So, yeah, I think broadly these are the three things I would like to highlight.
Would you like to add something to that list?
I think, as he said, very rightly said, negotiation is the point when you can either take everything on you or
Yeah.
put everything on them.
Yeah.
So going into details makes a lot of sense. And just like, go have a nice person with you who's actually helping you vet the best possible things for you.
Right. Any kind of advice from a brokerage point of view that you would like to give here, both in terms of buying as well as renting, because that's applicable both ways. And even that, aspect in Mumbai has a very different angle because, for example, if you have entered into a rent agreement which is for a year, if you plan to renew that, you're again supposed to pay brokerage. But if you enter into a 3 years agreement with a lock-in of 1 year,
right.
You will not have to incur that brokerage. So one has to be smart enough to, understand as to how that can be played out well.
Right. So being a developer, of course, I have to take side of the channel partners because they help me sell 90% of my new properties.
Right.
But on a very serious note, even as a buyer, if I want to buy a home or I want to rent a home, even when I have rented in my past, I've always had a broker. When a broker speaks to the person, it's more easier. At times he's more, at times we won't be very direct talking to the flat owner whether what you want, but through a broker, that channel helps you negotiate better.
Correct.
Secondly, you are into your own business, you are busy with your stuff. There are chances you might forget a few things. So it makes more sense having a channel partner and paying that fee or paying a lawyer or a chartered accountant. I feel it is kind of an insurance policy which you have to make sure when you are taking something on rent.
Understood.
It's a very small fee, I feel, because, if you want to sleep peacefully, it makes sense having the right people working for you.
For your down payment, do you think it's fair enough to wipe off your entire savings, or how should one go about it? And even in terms of the assessment as to how much EMI can one pay in a month, there has to be some rule, right, to that. What does that rule state, and how should one go about it?
Let me take it one by one. So regarding wiping out entire liquidity, it's a strict no. I come back to the point that buying a home is an emotional decision. Sometimes people tend to stretch their budget as high as 20%, saying that I think this is what I like, or generally, Chintan may have a smile there, but developers or the channel partners tend to coax the buyer that this is a great rate at which you're getting. So why don't you go in for a little extra area because you are buying it? You don't buy homes every day. So yes, of course, that makes sense. But it's also a function of how much you can really stretch. So it's always good to have some emergency fund still kept available and not like go to ground zero and put everything as down payment. If it means you are going a little overboard when it comes to the home loan, I would suggest that is a welcome point, even if you want to stretch, because you can always then draw out your cash flow to manage your liabilities better. Which leads us to the second point of how much should be the EMI. So, as a thumb rule, it is said that EMI should not go beyond 40 or 50% of your in-hand family income, which is a good measure to have. But again, since we are talking majorly about cities like Mumbai, um, Many a times the EMI proportion goes higher than 50% because that's how properties are priced in a city like Mumbai, which is okay in my view. If you can go a little aggressive and you can also take, draw out a 3 to 4 year future income chart, be a little aggressive there and see whether your future income is supporting this higher EMI that you're taking. So even if your EMI lands up at around 40 to 50% of your third year or fourth year in hand family income, that also should be a good measure for those aggressive home buyers.
We're seeing that right now in terms of the premium and luxury space. From what I understand is that there is kind of demand, but there is no supply. Is that correct, or is the reverse? And secondly, even in terms of these developers, the real estate companies, they're shifting more towards premium and luxury segment now rather than affordable housing. Just want to get a sense as to how this gap is widening. Are people able to afford these luxury houses? What is the scenario? What is the market scenario
So
like?
post-COVID, if you study the market, there was a huge demand of bigger homes, luxury homes.
Correct.
So luxury is the most abused word because there is nothing like affordable luxury. Which
Not
is,
at least in Mumbai for
yeah,
sure.
there's nothing like affordable luxury. When I say
Yeah.
luxury, what I mean to say is a 2 BHK which is more than 800 square feet, which is huge. 3 BHK, which is more than 1400 square feet. That was the demand. People wanted balcony homes. People wanted amenities in their
Correct.
particular layout where they wanted to stay.
Right.
Low density buildings.
Right.
So that was the demand, and real estate developers are the ones who want to. A lot of people I know, they changed their plans. When they had two BHK options, they made a 4 BHK, a luxury, because that was the ongoing thing.
Right.
What is happening right now is the demand is still there, but particularly if you ask me, right now there are no 1 BHKs, compact 1 BHKs
Right.
available in the market. So
Correct.
any real estate developer who comes up with something like that, I think on this show, let me tell you, if you come up with something like that, there is a demand of people who want a home in a particular budget.
Understood.
For that, only shrinking your home makes more sense.
Right.
Your question was, is there a demand? You can just read the newspapers or on any Instagram reel where you come to know, like, home is getting sold for 600 crores,
Yeah, there is
500.
demand, but I believe there is no supply.
There is supply, there is less supply in ready to move apartments.
Correct.
But under construction, we have
There's
decent
pipeline.
enough supply, and a lot of my friends I know are only thinking to make luxury.
Understood.
But I think if you have that liberty to have multiple projects, it makes sense to have a bouquet of, affordable and luxury, and affordable luxury does not exist.
Right, absolutely. Just one last quick question to you, Arvind, on this one, very quickly. Because we're talking about buying, and this show will be incomplete if I don't ask you this question: buying versus renting. What would you prefer, and at what situation?
Good one. And I know whatever I answer, there will be oppositions to it. But here's my take that see, renting and a lot of stalwarts have been talking about that renting is the way to go. But I would put it this way: is that depending upon your life stage, so particularly when you have kids who have to start going to school or school going kids, at that stage in life, somewhere there is stability that is required in terms of your address. And that's where buying and staying in your own home makes, according to me, ample sense. Till you don't reach such point in time, renting could be an option because home generally denotes that stability, right? So if you have a school going kid, you wouldn't want to keep moving houses, A, and B, then you're forced to look at the same area because you wouldn't want to shift your kid from one school to the other due to your shifting of residences. So in these cases, I generally say that better to stay in your own home and invest in a home. Till that point, you can keep moving on rent.
All right, so that sums it up. Thank you so much for that, Arvind, and those insights. And thank you so much, Chintan, for taking out the time and speaking with us, and of course, coming to the studio and speaking with us. So thank you so much for both of you, gentlemen. And viewers who are watching this, I hope this helps you determine, whether you're supposed to rent out a property or buy a property. And of course, keep in mind as to what documents and what are the requirements before buying a property. And of course, like Chintan said, keep in mind, keep a lawyer and CA buyer aside. Well, the AMFI data for May as well has come in, and let's look at some data points. It's interesting because the overall net inflow has come at around 29,108 crore versus that of a net inflow of 2.7 lakh crore month on month. The AUM stands at around 72.2 lakh crore versus that of 70 lakh crore last month. The active in terms of equity funds has seen a net inflow of around 19,000 odd crores. Mid-cap funds has seen an inflow of around 2,800 odd crores, which is lower as compared to last month, which was around 3,300 odd crores. Small cap has seen an inflow of around 3,200, which is again less than that of last month, which was roughly 4,000 odd crores. Large caps, the flow has almost nearly halved because that is at 1,250 odd crores versus that of 2,600 odd crores in last month. Flexi cap has seen a net inflow of around 3,800 odd crores versus that of 5,500 odd crores. Sectoral thematic fund has remained flat in terms of growth. It saw an inflow of around 2,000 odd crores versus that of 2,000 odd crores earlier in April as well. NFO has seen an inflow of around 4,170 odd crores versus that of 350 crores. So that's a very interesting number to see. In terms of ETFs, the inflow stood at around 4,000 odd crores, and index funds, the flow stood at around 1,100 odd crores. So this is the entire data that sums up as to how mutual funds inflows, how they've seen how they've emerged this particular month, and we'll have to wait and watch out for as to where and which stocks have these mutual funds actually bought in and where they've offloaded. So it's an interesting data that will come in a day or two, but we'll have to wait and watch out for that. But with that, we're completely out of time on this edition of Your Money Matters. Stay tuned to NDTV Profit.